An uptrend is the one which forms higher highs and higher lows. A downtrend is the combination of swings which form lower lows and lower highs. And of course, sideways trend is the combination of swings forming same highs and same lows, right? But actually, to specify any trend, both highs and lows are not required. For example, if a trend is such that it forms higher lows, it can be said to be an uptrend. And if a trend is forming lower highs irrespective of its lows, it can be said as downtrend. This is the actual trend lines concept too. But drawing the line on the other side will give us price patterns, which will help us in analyzing the next moves. If these two lines are parallel to each other, there occurs the price channels, which we have already seen in our previous video. There are different possibilities too, like price forming lower highs and at the same time forming higher lows, or forming equal highs and higher lows, or lower highs and equal lows, or else can also form higher highs and at the same time lower lows. There are many other possibilities too, but let's stick to this in this video. These two patterns are called as symmetrical triangles. Actually, this is contracting triangle or symmetrical triangle, and this is expanding or reverse symmetrical triangle. This pattern is called ascending triangle and this is descending triangle. Let's discuss about these in this video. How to identify them, how to confirm them, and finally, how to trade them. So, welcome to the world of trading. First, let us start with ascending triangle. Let us see the textbook pattern first. In a proper uptrend, when price reaches a particular point, some big pockets like institutions start their profit bookings and so price corrects. When price falls, some new buyers or else old buyers too take this as an advantage and add their positions and so price rises again due to the buying pressure. But just think once. If you have very large sell orders, will you pump all of them at once? If done like that, due to enormous increase of supply, price will fall steeply and so your average closing price will be less. You may not be getting your desired profit, right? So, any institution who have large sell orders will release only few orders at a time and wait for price to retrace to that old level. So, there will be pending limit orders at the same price, right? So, when the price reaches the same level, due to sell orders there, price will fall. But aggressive buyers jump in quickly this time and price rises again. When this price reaches the same level, sell orders will be released again and so price falls. Now, when we connect these points, we will get a horizontal line, which is resistance line. And when we connect these 2 points, we get upward sloping line, which is support line. From the third touch on both sides, we can confirm that this is an ascending triangle. So, you might have very well noticed by now that due to the battle between buyers and sellers, the price moves in a range and we can call this as consolidation. In most cases, volumes in this pattern will be less compared to the previous trending period. A traditional and perfect ascending triangle will have high volumes in these up moves compared to the volumes in the correction moves. Okay, at one point, this group will complete all its pending sell orders. In most cases, the big pockets will release its orders in 3 to 4 times. So, when the price reaches there, again due to the buying pressure and lack of selling pressure, the price breaks the so-called resistance line and continues its uptrend. This is called as breakout. The volumes in this breakout candle will be high compared to the average volume in this pattern. This adds more confirmation to the breakout too. So, considering all these aspects, ascending triangles are mostly bullish in nature. Not always true too, because resistance may be strong enough that buyers may quit and sell orders may be pending more that the breakout will happen from the downside and price falls. Anyways, this point which both lines meet is called as apex. Why I am telling this is, in general, breakout happens at a distance of 62% of the distance from pattern starting to the apex. And again, not every time, but I suggest you to backtest every breakout of the triangle and keep this in mind too. So, let's take this on charts. See here, there is an ascending channel. This is the horizontal resistance which we have discussed about. This is the ascending diagonal line. See here, both lines has 3 touches and this is a proper uptrend. So we can predict that this is an uptrend continuation pattern and can wait for the breakout from above line. Now let's join these two lines. This is apex, right? Until breakout, we can also trade the anticipated range bound price movement after 2 touches on both sides. See here, for example, we can take entry for long here, stop loss few pips below this and take profit few pips below this line. Next, we can also anticipate the breakout time by observing in and around this 62% time from apex. Of course, this is not a solid rule, but just keep it for analysis. See here, the breakout has happened around 96 bars and apex to pattern starting distance is approx 148-149. So 96 out of 148 is 62%, right? Next, coming to the breakout trading, it is better to wait for a candle to close outside the line and wait for next candle to open outside the line. With that, we can trade with more confirmations. Target is the height of the pattern where it started. You may think that when we wait for confirmations, we will miss all these profits. But see here, even after confirmation, we are left with this profit, right? You can be an aggressive trader too, but only with much practice and knowledge. With better practice, you will surely develop your own entry and take profit points. Next, descending triangle. Same and opposite of an ascending triangle. In a downtrend, at one point, many traders feel it as the best price to buy the stock. And so, at that point, buying pressure may increase there. When price rises at that point, aggressive sellers enter at one point and so price fallbacks to that area. As said before, large orders will be released phase by phase. So, there will be pending buy orders at this point and so price rises again when it reaches there. Now, aggressive shorters enter the market very early, even the price reaching the previous line and make the price fall and so on. Same like ascending channel. So, if all these swings extreme points create a downward sloping line at the top and a horizontal support line at the bottom, then this is called as descending triangle. Traders can plan both range trading and breakout tradings according to their interest and their trading style. Traditional result from this pattern is these buy orders complete after third touch and with less buying pressure and good selling pressure, price breaks the so formed support line and will continue its original trend, that is the downtrend. But not all the times in practical. Okay, let's check an upside breakout from the example on charts. See, this is a descending triangle, but previous trend is not a downtrend. So, as this has not followed all the textbook rules, we cannot predict the side of the breakout. What we can do is draw a triangle and wait for the breakout and go in that direction. Before that, we can trade the price movements in the range too. See here, this is the horizontal support line and this is the downsloping trend line. See here, the breakout happened downside, but as we discussed, we should also wait for the next candle opening too. The price has opened above from the top line and also the next candle too opened above. So, with more confirmations, we can go long here. This is the target. Next, symmetrical triangle. This can happen in any trend. Let's take uptrend into consideration. After a pullback of this style, price again continues its main trend. But now, instead of price forming a higher high, it forms a lower high, like this. This hints us that there may be a possible triangle pattern. To get more confirmations, if the next low closes like this, if we connect the highs and lows and if we get the pattern of the seen shape, then this is a triangle pattern. Next, if these two slopes are of the same angle, then this pattern is called as symmetrical triangle pattern. As these two lines are contracting with time, this is also called as contracting triangle. Same here, with third touch on both sides we can confirm the pattern. If this pattern is formed in a proper trend, be it an uptrend or downtrend, this pattern shows that there is a consolidation going on. That is, there is a battle going on between buyers and sellers. To be precise, the battle between profit bookings and fresh positions. So, this can be treated as a small pause in the trend and so these patterns are mainly trend continuation patterns. Of course, on few occasions, trend reversals might also happen. Same here, we can trade the ranging prices, that is, buy here and sell here, etc. Also, breakout traders wait for the proper breakout of the price from this pattern. It can break from any side. As said, in most cases, breakout happens after 3 touches. This has proved in many backtestings too. Okay, let's check on charts. See here, a line connecting the lows is one trend line, and another trend line is the line connecting these highs. These two slopes are almost having the same angle, so we can confirm this as a symmetrical triangle, contracting symmetrical triangle. Range trading and breakout trading rules are same in this pattern too. Just to check if you have understood the concept of stop loss, for example, if you go long here, where will you place your stop loss? Just few pips below the previous swing, right? But see here, even its previous swing low is just few points near and below. So it is better to place your stop loss below this swing low. There is one more concept called volatility based stop loss, which we can discuss in a separate video. Okay, next, expanding triangle. If for a price movement of this type, if we join the tops and the line connecting the tops will be an upward sloping line, and if we connect the lows and if we get a downward sloping bottom line, which is called as support line, this type of pattern is called expanding triangle. 2 touches on both sides are minimum for pattern recognition, and confirmations can only be taken after 3rd touch on both sides. As same with other patterns, we can do range trading and also breakout trading. But in this particular pattern, breakout trading requires more caution, which we can discuss in some other next video. This viewers is basics about triangles. Let's meet in our next video. Have a happy, safe and profitable trading. Jai Hind.